Hi, I'm Mike Bellafiore, and welcome to SMBU's Trading Lesson of the Day. Today we're going to talk about sizing properly with an example in CCL. So the goals for this presentation are to teach you an important tape reading sizing tip. We're going to help you add and subtract from your positions like a pro. We're going to learn how to use intraday catalysts to get big responsibly. And hopefully we're going to improve your trading. So the trading lesson. The trading lesson is the importance of watching the tape carefully after a stock trades above or below an important level. How the stock trades can give you important information about its strength or weakness above or below these important levels. And we're going to go over some trading scenarios and your options for when this occurs. So we talk about this a lot. We want to talk about things in real time that we're doing. So I put out a tweet when I was trading CCL that I thought that 38.65 was a significant and important intraday level in CCL. When we take a look at the longer term charts, we're looking at 38 and 36.50 as levels that the stock might go to if it got below that important intraday level. And you can see from this chart that 38.65, for whatever reason, was a significant level where buyers and sellers were coming together during this intraday. And so I wrote again in real time, sharing a tweet on StockTwits, that it's very important to watch your stock trade after it breaks, after it clears an important level, like it did in CCL. So one of the great images that I hope you take away from this is that of a golfer. And this is perhaps something you will observe when you watch Phil Mickelson golf, is that when he putts and the ball slides by the hole, he pays special attention to how it's breaking and how fast it's moving away from the hole. So for his next putt, he is gathering information to improve the chances of him making that putt. And we should use this for our trading as well. We want to be like Phil. And I wrote again in real time, like a golfer watches a putt after it misses the hole, you should watch the tape above or below important levels. So let's go over some trade scenarios for this trade that I was in to specify and to clarify what I mean by this. So we're thinking about trading CCL. I was short a little bit, thinking about adding it if it gets below this important 38.65 level. It does. It gets below 38.65. What do? You hit tier 2, you hit tier 3. But what happens if all of a sudden there's a rebid at 38.65? What do? You got to cover tier 2 and you got to cover tier 3, and you should even consider covering some of tier 1. Different trade scenario. All right, CCL gets below 38.65 and drops very, very precipitously all the way down to 38. What do? I'm going to take some off in front of 38. I'm going to re-add from a spike from 38 if that happens. Certainly closer to that 38.50 level for re-adding, the better. Another trade scenario. CCL gets below 38.65 and drops to 38.33. What do? Well, I'm hitting tier 2, I'm hitting tier 3 when it gets below 65 cents. I'm going to take off tier 2 around that 38.33 level, and I'm going to consider shorting some more if the stock comes back up to 50 cents and doesn't trade above that 50 cents. Another trade scenario, what happens if it drops 38.65 and trades down to only 55 cents? This is disappointing, right? We're going to hit tier 2 and tier 3 at a minimum when it gets below 38.65, adding to tier 1. But what happens if it only goes down to 55 cents? This is not as far down as we expected when the stock cleared, got below an important level that we were watching. Well, I'm shorting tier 2, I'm shorting tier 3, but I'm then going to cover tier 2 and tier 3 because of the tape. And in this scenario, that's what I did in this trade. I was waiting for it to get below 65 cents. It did. I got very aggressive. But it didn't really go down that much. It disappointed me in how it went down. So I covered tier 2, tier 3. I held tier 1 that I had already been short, stops above 81 cents for that. And when it went down to 38, I covered most of it. And so one of the things you want to be doing when you're actually trading in real time is, think about what do you expect from the stock when it gets above or below certain levels. And you want to be thinking about, just like I did here, these different trade scenarios about how you're going to take off or how you're going to add and what it's going to look like for you to do that. Stocks don't just get below 65 cents and go right to 38, even though that was the next technical level. And there are decisions that you want to think about making, adding or subtracting, lightening up or getting more aggressive based on what you're looking at on the tape. What I wanted to see when we got below 65 cents, we didn't see. I wanted to see that stock at a minimum go down to 33 cents. I wanted to see the stock move away from that 65 cents and spread out a little bit. I wanted to see the bids drop very, very fast. All right, I wanted to see a big move away, and I wanted to see the bids drop very fast. Okay, and then what I wanted to see is after it dropped a lot, it not to come back up that much. At a minimum, I wanted to see down to 33 cents quickly, and then not above 38.50, and definite sellers at 38.50. And we didn't get that. And so when we didn't get that, I made decisions. Even though the stock went all the way down to 38, I still did the right thing by lightening up because it wasn't a play to be as aggressive on as I thought it could be when it got below 65 cents because of the tape. So we do this all the time. These are pro tips that pro traders make. And the reason why we do this is that we want to get really, really aggressive when we see catalysts. Below 65 cents is the catalyst, but we can't just sit there and say, well, it got below 65 cents. The only thing that can happen is it can go down to 38. That's not what happens in the real world. So on that note, to summarize, you want to watch the tape above and below important trading levels to determine your size. Get in the habit of doing this. Certainly we'll leave you with our last thought from the playbook, which is, and this is a good example of you getting better. You can be better tomorrow than you are today. Until next time, thanks for watching. We'll see you soon. Hi, I'm Mike Bellafiore, author of The Playbook and One Good Trade, co-founder of SMBU and SMB Capital here in New York City. If you want to learn more about SMB, please go check out smbu.com. Check out our blog where we share tons of trading tips, trading stories, trades we're in, trading anecdotes, and also take the time to sign up for our 10-day free training program, which we offer to the trading community at smbu.com. We hope you enjoy it. We hope to see you on the site. Trade well.